This video is for educational and informational purposes only and is not investment, financial, or tax advice. I am not a financial advisor. Please always do your own research. Investors, welcome a very special guest. We have Yuri Kojamirian, the Chief Investment Officer over there at TEMA ETFs.
Marcos, it's pronounced TEMA ETFs, not TEMA.
Where in this video, we're going to be uncovering and just going into a deep dive about their ETF, the NASA ETF, ticker symbol NASA, which is the TEMA Space Innovators ETF. And there's so much buzz right now about SpaceX, about the space economy, and this ETF invests in the emerging space economy, but also gives you exposure to SpaceX pre-IPO, which you can't even invest in SpaceX unless you do it through ETFs. Like one is going to be NASA, and of course there might be many other plays, but we're going to be talking about SpaceX, investing in a pre-IPO, as well as the NASA ETF by TEMA ETFs. But first of all, Yuri, welcome to the channel.
Thanks so much for having me.
First question for you is, what made TEMA ETFs launch the NASA ETF, and why should investors be super excited about the top holding, of course, being giving you exposure to SpaceX?
So I think there was a couple of reasons why we felt now was a time to launch a space-focused ETF. I think at first, the universe of space companies has matured. There are enough companies, and especially importantly, enough quality businesses for us to build an exciting portfolio that is purely exposed to the space economy. The second part was that launch costs, which is a very important variable in the space economy, have come down a lot. And this is really thanks to SpaceX. So since the time of the shuttle program, launch costs are down about 90%, which is going to unlock and is unlocking lots of interesting business opportunities in space. And if these launch costs continue as they are on this trajectory, it's going to create what we think is a bit of a golden decade for the space economy. So there's an exciting point in terms of the overall kind of macro of space. And then the third point is SpaceX, which I think is going to be, probably the most anticipated IPO ever and a very exciting company. And I think a lot of people don't appreciate how fundamental this business has been in terms of transforming space. I mentioned launch costs already, but it's dominant in the space economy. It's vertically integrated and it's creating a ton of value through doing that. And for us, it's also going to mean lots more investor eyeballs at this part of the market. And really, the investors are not going to be able to ignore it anymore. And we felt that this was the time to build a pure play space ETF with SpaceX exposure.
Now, in terms of like the top holding, of course, it's going to be SpaceX, which is a private company that's set to IPO, hopefully sometime this year, rumor has it. And of course, if you could touch on like one main point on why it's the top holding in the NASA ETF, because there's other, I guess, not hype plays, but investors like RKLB, for example, it's a very popular one that I know is one of the top holdings in many other space ETFs, but yours is going to be SpaceX. And also, how much exposure does one have to SpaceX if they were to buy the NASA ETF? And how did TEMA decide to give that exact exposure versus maybe a higher exposure or even like a lower exposure?
Yeah, absolutely. So when we first set out building Space ETF, and we do this for all of our ETFs, we wanted to build a pure universe. So we're looking for companies that are exposed to the space economy. So we're not looking for legacy businesses, companies where space is like a small part of what they do. Their defense primes, all of this kind of companies we felt were missing the forward-looking part of space. And as we did that analysis, we learned more and more about SpaceX, and we really appreciated how fundamental this company is. This is the business that single-handedly handles more than 80% of launches in the last quarter. It is a company that is fully vertically integrated. It's pushing the envelope. It's probably going to be the first company or first government or anything in the history of mankind that has fully reusable rockets. It is a fundamentally important business for the space economy. So when we felt, okay, we're going to build a space ETF, having SpaceX not in it just felt wrong. It's like having a semiconductor ETF without NVIDIA. It just doesn't kind of make sense. And so we started to look into, okay, we want to have this exposure. How do we get that exposure? And of course, the company has grown in size in the private markets, and it's created quite a liquid secondary market where we were able to transact in those pre-IPO shares of SpaceX. And it just felt right. It felt right to put it into the ETF. Why is it the top holding? for all of the reasons that I mentioned. This is a fundamentally important business to the space economy. It is also the business that's pushing the most in terms of innovation. And it's kind of spearheaded what we call the commercialization of space. If you think about the history of space travel and space economy before, it's very much government-led, old school businesses putting satellites, very expensive ones, up into geostationary orbit, very expensive parts, lots of over-engineering, kind of aerospace, that kind of legacy, if you will. And SpaceX, led by Elon Musk, pushed space into what I call the commercial age. So the idea that you've got to keep launching rockets, failing fast, learning. You've got to build lots of satellites and put them into low Earth orbit in constellations. And this led to lots of progress, and SpaceX has been responsible for that. So from the fundamentals, kind of the core culture of that business, it felt right for it to be the biggest position in the fund. And then equally from the fundamentals, we felt that the Starlink constellation is the leading low Earth orbit satellite constellation. It's just there everywhere you look, SpaceX is the leading business, and therefore on fundamentals deserves a leading position in the fund.
Now, what kind of a percentage allocation can investors expect when they buy the NASA ETF, if they want to, of course, get exposure to SpaceX? Because it seems like that's what makes this ETF super unique. But of course, I know that NASA has had great performance since launch, but there's also a very big question is what kind of exposure does someone get to SpaceX with NASA?
Yeah, so we talked about 10% of the fund, anywhere between 10 and 15% of the fund. As you know, transacting in private shares isn't the easiest thing, and we felt it was important to go through all of the legal work, the ability to transact, being set up on some of these secondary platforms, all of that hard work to bring an ETF in a transparent, easy to use vehicle for investors, we've done. We're institutional investors who've been doing this for many, many years, and we kind of looked at all of the details and made sure that it was right. Then we decided at sort of kind of a weight of 10 to 15%. We felt that was the right weight, and that is the position we're going to manage it. Sometimes it'll be higher, sometimes it'll be towards the high end of that, sometimes a bit lower, but typically we're managing towards that.
Now, I'm going to push back on you and ask you like a very interesting question, but some critics might say, the NASA ETF is great. I get exposure to SpaceX, but there might be one ETF or maybe like a mutual fund that has more exposure to SpaceX. I think it might be near like 15 to 20%. Why not increase the exposure to SpaceX with NASA? Or is that like a more of a diversification rule you guys have to follow, and you guys want to be judicious to your investors and maybe not give overexposure to SpaceX if, it might be a very volatile play come IPO?
That's a great question. So there's a couple of considerations here for investors to think about. First of all, this is an ETF, and within ETFs, there are limits as to how much you can have in what are called illiquid positions. And that limit is 15% of the portfolio. So there is a kind of a physical sort of limit which you don't want to cross. Some ETFs may or may not cross it, but you need a plan to get it back down. And generally, we're trying to manage this prudently and deliberately for investors. So we don't want to breach that limit. So I think that's one of the considerations why the position is where it is. The second part is we want to give investors an exposure to the space economy. And that means lots of different companies across different sub-themes and themes. And SpaceX is one of those and a very important part, but there are other companies that we think are equally interesting in their particular niches and parts. And so we want to give investors a decent exposure to the space economy, a pure play exposure with SpaceX at its helm.
Now, how does the NASA ETF get its exposure to SpaceX? Because investors like myself, even yourself, well, maybe, I know that you can have access to maybe some special buddy with some investment banks or maybe some VC firm, but retail investors cannot buy SpaceX themselves, but you guys give exposure for retail investors in the NASA ETF. So how do you get the exposure to SpaceX? I'm assuming it's through an SPV. So can you explain more of that?
Yeah, absolutely. Look, the exposure is through SPV. The SPV is purchased through secondary transaction platforms. As mentioned, SpaceX has become a very large company, which means that it's become quite liquid in terms of its sort of secondary transaction market. Whether it's VCs, whether it's employees, people are wanting to transact in these shares. And this has created this opportunity, probably a factor of the company staying private too long in a way that has created this liquidity. And so we've purchased these SPVs in those liquidity pools that are available. I've been very surprised how liquid these secondary markets have become, especially for some of these larger companies. So you own it to SPV. Now, the point about retail investors and think about this. Now, of course, investors should do all of their own work thinking about whether to look into CTF, SpaceX or not SpaceX. But if you're comparing purchasing SpaceX directly to purchasing CTF, the reality is going direct requires you to be sophisticated, to look through due diligence documents. There's a lot of people claim to give exposure, so there's a lot of fraud going on as well. And I would just caution investors to be a bit careful about making those kinds of investments and thinking about that. There's big minimums, there's all kinds of problems. In the ETF, you get access to SpaceX through just a simple, transparent SEC registered structure. Within that, you hold the SPV, which we have spent time looking at the underlying documentation, doing our due diligence on the SPV structure and making sure we own what we own. And that is kind of the advantage of owning it through the ETF.
Now, I really appreciate you kind of explaining that, because I know a lot of people have had questions about SPVs, and maybe a lot of critics would say, you don't know your exposure. They own it through like this trust, who owns it through a trust, who owns it through a trust, and there's like a lot of fraud, and you just don't know like what you're getting yourself into unless you're sole owner of the shares. But one question I saw circling online with many of your interviews, and even just with other ETFs and funds that have exposure through an SPV to SpaceX, is when SpaceX goes public, you've of course mentioned that SpaceX, because you guys get the exposure to SpaceX through an SPV, is what happens to the SPV position once SpaceX goes public in your portfolio? That's like the main question.
Yeah. So we own through SPV, and you're absolutely right. There's all kinds of things you need to spend time on, legal, operational due diligence to make sure that you're getting what you're getting. The IPO date comes around. Now, we don't know exactly when the IPO is. Right now, the press says the S1 has been filed confidentially. And potentially the IPO could come as early as kind of June or end of June. What happens to the SP? Well, just like all other internal shareholders of SpaceX, we're going to get locked up in the IPO. So what will happen is the company will IPO and the shares cannot be sold. So they'll all convert into ordinary shares, be passed through their beneficial owners, and will effectively will effectively be locked up. And now the lockups, we don't know what they're going to be. They're going to be discussed in the S1, decided by the large internal shareholders, the banks. The reality is, for such a large IPO, you don't want a huge avalanche of sellers to make sure that you create a stable market for this. Some of you might remember the IPO of Facebook. They used staggered lockups. Potentially that could be something that happens. The typical lockup is about 6 months. After 6 months, the shares are freely traded, and so they become equivalent to the publicly traded shares. That is what is going to happen to the SPV. So we're very deliberate, and we know that this is what's going to happen. We're long-term holders of this, so we're not fazed by that.
Many investors want to know, like, why invest in these space stocks and the space economy? Because the hype right now is memory and semiconductors and, the Mag 7 and technology. Those companies have like a lot of year-over-year earnings growth, revenue growth. They're low marginal cost characteristics. They're companies that people are most familiar with, and they could buy and hold and do their due diligence with that. But with space stocks, it's super unique. A lot of people aren't paying attention to it. They would argue it's some of the space companies aren't as profitable as these semiconductors and tech companies. They're high marginal cost, but the NASA ETF is up since inception, and all of these space stocks are running up in the last 1 year, which is absolutely insane. So I want to get your opinion on maybe why space is becoming a new trend again, and why it's something that investors should take a closer look at, because I know I like to preach to my followers, think 5 years, 10 years from now. Don't think 1 to 3. That's like a good outlook.
Yeah, I think that's absolutely the right way to think about it. The way, there's lots of ways you can get excited about the space economy, but perhaps the one that sticks most clearest in my mind is launch cost, as in the cost of launching a kilogram of whatever into orbit of the Earth keeps falling. It's down 90% and it's probably around, let's call it $1,000 per kilo. Once we get that down further, which is happening and is going to happen over the next 5 years, you're going to see this inflection point, which you see with lots of technologies, where as the cost falls, the use cases explode. Think about what you could do in space. You could manufacture in space. Certain things are just much easier to manufacture. Even the semiconductors and certain materials that go into the semiconductors are a case in point. You could also put data centers into space. Now, at first, I was very skeptical about this idea, but the reality is very credible companies are looking at it. The big advantage you have in space is infinite energy, right? We are effectively on Earth through fossil fuels and solar, whatever, harnessing a tiny, tiny percentage of the power of the sun. In low Earth orbit, you have none of the atmosphere interference. You basically have infinite energy. So you have a trade-off if you're going to put something that is very power hungry, like a data center. You have the fixed cost of launching all of that into orbit, but then you have the zero variable cost of free, essentially, energy, and actually also very easy to cool as well. You know, these GPUs, they get warmed up. In space, all you have to do is just waft the radiation. There's no such thing as kind of other types of heat in space away, and that's it. It's much easier to cool. And so you kind of have this advantage potentially. And especially if you start to think about things like autonomous vehicles, things like robotics, things like, you know, this idea of Internet of Things, which was popular 10 years ago. You can't really enable those with this sort of terrestrial base. You really need this kind of fast, low latency connection everywhere to be able to enable some of these things. And that, I think, is going to be a very powerful driver, and an interesting part of that exploration. And all of that is launch costs, right? So you can kind of stagger it, right? You're going to be manufacturing data centers. And I'm not even talking about where we're at now, which is we have gone from a world where you had very expensive satellites up in geostationary orbit. Now you have constellations circling the Earth, and many, many more are planned, and many more satellites are planned that are giving this sort of ubiquitous coverage to the, let's call it 2.5 billion people in the world that have no internet coverage whatsoever. And the 85% of the Earth's surface that's not covered by mobile signal. And so there's kind of wins on Earth, wins kind of in orbit. And then, of course, we can start to think about what happens beyond, because once it's cheap enough to put infrastructure into space, you can then go from that to other things like going to the moon and Mars and all of these parts. So to me, it's sort of a very exciting story because it's all being unlocked by these launch costs, and you have these inflection points in technology. That's why it's such an exciting growth story. You have new businesses that are going to take advantage of that, vertically integrated businesses that are going to make it happen.
Now, what do you have to say to people who are going to argue, why would I, or at least look into the NASA ETF by TEMA when SpaceX goes public to get exposure to SpaceX versus just buying SpaceX myself?
Yeah, look, at that point, SpaceX is going to be freely traded, so investors can buy it. It's going to be one of the largest companies. It will have IPO'd. But for investors who are thinking, okay, I want to get a diversified exposure of quality space companies that are purely exposed, the NASA ETF is the solution for that. And the other thing is you want to find interesting businesses exposed to space as well. So one of the key differentiators of our ETF versus others, or sort of doing it yourself and buying some of the well-known names, is that we've spent time and effort looking and uncovering some of the more interesting parts of the space economy, particularly companies that are supplying those SpaceX, Rocket Labs of the world. And those companies are kind of hidden in the market, right? They're in Korea, they're in Taiwan, they're in the UK. Those businesses are supplying the space economy. They're often really high quality, lower valuation than some of the well-known names, and are seeing quite substantial growth. I mean, just going back to that first stage of what I was talking about, you know, if you look at what has been filed with regulators to put into low Earth orbit, satellite launches from here for the next, I think, pretty much decade is going to CAGR at about 40% a year. So if you're linked to that kind of launch cadence, you're just going to see that growth as part of that base volume growth. I'm not talking pricing, more components. You know, these things are getting more and more complicated in terms of their signals, their solar panels, all of that stuff. So you get that kind of base growth just from stuff that we're going to be doing on Earth that's already in the planning books. So what I'm trying to get at here is that we've uncovered some of this stuff, and that's within the ETF into the diverse portfolio and giving investors exposure to that.
Now, I want to confirm, because a lot of people commented on many other videos you did, if or not if, but when SpaceX does IPO, that the NASA ETF will still own SpaceX. And I'll throw in like a bonus question: is there's a lot of hype around the IPO, right? With the whole like index. I'm not say disaster, but this whole indexing stuff that might go on with the SpaceX IPO being like the biggest company to IPO in history. And, there's going to be a lot of demand, maybe low supply. And the first one is, will NASA still own SpaceX once it becomes public? And then the second question is, like, how do you guys manage or expect to manage the SpaceX position once IPOs? Because let's say it runs up a lot in value. I'm assuming that's going to, have the exposure on your guys' website to be a lot more than what it is. You guys have to maintain a diversified ETF. So there might be stuff like trimming or rebalancing that go on. And investors are super excited about this IPO, but some of them are very fearful of what could potentially happen.
We're professional investors. We've been kind of looking at this and thinking about exactly what will happen in lots of different scenarios. I can't forecast exactly how it is. You have to assume that we're deliberate. These are actively managed. This is an actively managed ETF. We're deliberate in the position sizing, the decision to include it as a private company. And we will manage each stage as it kind of develops. I can't predict what we'll do in the different scenarios because as they come and unfold, we will react accordingly. We're just going to tell, what I want to tell investors that we're very deliberate about what we're doing here. And running the positions as we think it is. This isn't a passive index. There aren't mechanical rules about how these things are going to work. We're investors who've been doing this for many, many years, and we're going to be just deliberate about deciding what the position size and things will be. The one thing that for sure is that the private stake is going to be locked up. So we can't change that. That will not be impacted.
What are some other names that you're excited about in the NASA ETF? Because there are some other names that people are super excited about. Of course, RKLB is a holding in your guys' portfolio that people really love. And of course, AST Space Mobile. Those are kind of two of my favorite, but I don't know what other names that you like and maybe why they deserve a good spot in the NASA portfolio.
It's like trying to pick between all of your kind of favorite children, right? It's difficult. I think one of the things that I really want to make kind of clear is that we're trying to build a portfolio of exposure here to the space economy. So each part of the portfolio works in a different way, gets exposed to a different theme. They work against each other. This is why the ETF works well together rather than necessarily individual stocks. And, people who are picking individual stocks, that's great. Make sure you do your work and your analysis. But no individual one stock is going to kind of make or break this ETF. The reality is it's a portfolio of companies and we're giving investors that diversified, interesting exposure. So having said that, maybe I can kind of pick on a couple of sub themes that I think are really interesting, and then we can dive into the specific companies. Maybe I'll talk about Rocket Lab as an idea. I think Rocket Lab is very much part of what we see as the sort of future of space, right? There's this evolution that has gone on in space from essentially a government-led, very expensive, highly risky enterprise moving very slowly to this commercial space endeavor, if you will. And SpaceX has led the way, but there have been followers and fast followers, companies like Rocket Lab, that are going to try to provide an alternative for launch. The reality is SpaceX takes so much share of launch right now that if you're a government or you're a commercial player, you can't rely necessarily on SpaceX having the slots. And in many cases, SpaceX, because of its vertical integration, is a direct competitor for your business. They compete with you on satellites. They compete with you on God knows what, right? And so you are going to think twice about that. And so I think there's room in the market for more launch providers, but they have to embrace that a new kind of methodology of thinking about space, which is you have to keep trying, you have to launch rockets, you have to learn from it, and then you have to put them up into space. And Rocket Lab is very much that business. And I think the way investors should be thinking about this is it's probably like the number 2 platform out there in terms of launch. And it's also a vertically integrated business. And so you've got to be thinking, if SpaceX is able to achieve this, other people are going to be able to achieve this as well. They're going to be able to learn from it. And Rocket Lab is an example of that, and that kind of forward-looking part of what we're trying to do in the ETF. Other sub-theme, which I think is really interesting, is kind of the international part of space. Historically, space has really been about kind of collaboration between different countries. And now, unfortunately, you're kind of entering the stage where most countries are going to want to have their own capabilities in space, which means launch, satellite constellations, and satellite manufacturing. And you're seeing that, Japan, Germany, they're investing large sums into getting their own local champions. And there's a couple of companies in the portfolio, like OHB is an example in Germany, that are going to benefit from this. Germany's committed something like 30 to 40 billion over the next 5 years into space. They want to build their own satellites, launch and constellations. All of that is going to require companies to do it. They've understood that companies are going to deliver this better than doing it as a sort of on the government side, and are going to back the local champion with contracts. And that's, I think, is an interesting side story. And there's companies in Japan as well, in Italy, that are exposed to this. The second is the supply chain that I talked about. And we love the supply chain because it's basically the part that requires the most work, right? Essentially, a lot of investors will have heard of Rocket Lab. A lot of investors will have heard of AST, but not a lot of investors will have heard of Sphere Corp in Korea that makes the alloys that go into the SpaceX rocket, or heard of Filtronic, which does a lot of the RF signals for the base stations for Starlink. SpaceX is their biggest supplier, biggest customer. We've just spent time finding these interesting businesses, and they're part of the ETF. So often what you need to think about as this kind of theme evolves is, how can you be forward-looking? Example, companies like Rocket Lab. How can you find things that other people have missed, some of the supply chain? And how can you think strategically about where are the relative winners going to be, for example, the international part?
Now, can you walk me through the total, or like after everything is said and done, like the expense ratio? Because I know like some cover call ETFs have like an expense ratio, but that's not like the real expense ratio. Like some leverage ETFs have an expense ratio, but that's like not the real expense ratio. And then some like funds that give you exposure to pre-IPO companies have an expense ratio, but when you look at like the prospectus, like there's hidden fees and stuff. So if you could walk me through like the expense ratio, how liquid is this ETF? Because I know some other funds, they have exposure to SpaceX, but you can't like just buy and sell it. Like there's like there's a minimum, there's like a $3,000 minimum, and then it's not an ETF. There's like these like private funds, but they buy them on different platforms. There's like a minimum, and then also it's not liquid as you think, because some people think you could just sell it right away, but you have to give them like a heads up, and then you have to there's like a whole process on it. So I know I asked you a lot of questions, but I'll just throw it back to you.
It's a great question. And I think it's really important that investors do their own homework. So head to our website, www.temaetfs.com/NASA, NASA. And there you'll find all the regulatory information, disclosures, prospectuses, which will give you a perfect picture of exactly what the fees are and what you're paying for. The beauty of ETFs is that full transparency, and you can get that on those websites. So I really recommend, and I feel quite strongly that investors do their work and look at this themselves. Having said that, basically, right now, the ETF is offered at a 0.94 gross expense ratio and a 0.87% net expense ratio. And effectively, what you're paying for is a 0.75% management fee. And then the difference between those fees is effectively the acquired fees from acquiring the SpaceX stake. So all in, 0.94 gross discounted to 0.87 net is effectively what you're paying as an investor, which is quite attractive relative to some of those alternative exposures and things. And I think it's important for investors to appreciate that we're trying to bring this exposure, this purity exposure with SpaceX in it, at a fair price.
Liquidity, because many investors want to know the whole pre-IPO thing. I know a lot of funds are launching with SpaceX exposure, with I know Databricks and Stripe and all this type of stuff, and they want to know if this fund that they could go on their brokerage, they could buy it today and sell it tomorrow, and it's like boom, fully liquid.
Yeah, well, I recommend investors hold on, because I think there's lots more to come in the future, and it's an exciting kind of space. But of course, I appreciate that there are lots of different types of investors that will own this ETF. This is an ETF. This is a fully liquid vehicle. Can transact it just like any other share on the market. It trades at a premium discount to NAV. So, what you're transacting as kind of what you see on the screen. It's very liquid in terms of trading. I think, today we're trading maybe $2 million shares. So it's a very, very liquid ETF. and accessible for investors in that sense. So all of the rules and the consideration that you're thinking about from an ETF perspective apply here. We haven't really seen massive difference, especially relative to some of our own ETFs in terms of bid-ask spreads or premiums to NAV. The ETF has traded at a premium to NAV partly because it's had inflows. And so broadly, it's behaved very well in terms of its liquidity profile as an ETF out there from the market. So investors who are worried about that, you can freely transact in this ETF.
What is like one key risk that investors should be aware of when investing in just like the space economy as a whole? Because there's a lot of hype around the space economy right now. It's been a silent trade, not trade, but it's been silently going up, and people have been putting their eyes on memory, and they're not looking around at what else is there in the bull market. So what's one key risk about the space economy that you could think of?
Well, so it's space, right? Lots of things can go wrong, right? Rockets blow up, satellites get lost. One of the interesting things that's changed, I think, from that perspective in the space economy is as you think of it as a commercial enterprise, each of those incremental losses means less and less than it used to, right? If before you were sending a $600 million satellite up into space, you were really worried if you lost it, and it had a very big implication for the company, even if it was insured, all those kinds of things. Now, because it's commercial enterprise, even losing single satellites, it's fine. It's part of what they're trying to do. So I think that's a lot of because we've entered this commercial era of space, a lot of those kinds of risks have been retired. But I think ultimately it's still a dangerous place to be. Equipment can get lost. And I think the other part of it is that it's partly because you're getting so much excitement and growth, you have to be very discerning about the kinds of companies. The history of space, unfortunately, is one of people over-promising, under-delivering. It's a history of bankruptcy. It's a history of fraud. You have to be very, very careful about the types of companies you're investing in and thinking about, partly because you want them to be sound operationally, be decent quality, have the balance sheet and kind of ability financially to carry out these somewhat dangerous missions out there. And so you really need to do your homework, if that makes sense. And so what I would say is that there are risks, but there are in very many ways analyzable risks, which is just do your work, figure out what the company is about. And if it just sounds too good to be true, it probably is too good to be true to offer these kinds of wins. So I think that's one thing. I think there's a lot of excitement and growth. I think a lot of risks have been retired, but just be careful about the types of companies. They come in these kinds of periods, and make it a bit, difficult.
How does the exposure of SpaceX go up or down in value? Because investors cannot go on Google, type in SpaceX and see a stock chart of it going up and down intraday, because of course, you guys hold it through this SPV vehicle. So how does it move? Like, how do you guys determine the value of it? Because investors aren't going to know. One of the main critics that people might say about this fund is, why don't I own SpaceX in this other ETF or this other fund? But they perform very differently. Well, first of all, you guys are a pure space play, and then some other ETFs and funds or mutual funds have exposures to many other individual holdings in other sectors. But I'm just gonna hone in on how do you guys know the exposure of SpaceX is value, going up or down, and the whole process behind that?
I'm going to point you to our website, where what we've tried to do in the sort of spirit and of ETFs is provide a lot of transparency. So we've published an FAQ on the page, and there are lots of answers to specifically these kinds of questions around SpaceX and the private holdings. Essentially, and this has been agreed with our board and the ETF trust and all of those things, is we value the private stakes at the last transaction cost that we have transacted in. So whenever we're buying or selling a SpaceX ourselves, mostly buying, because we get locked up, so we can't sell, we're effectively valuing it at whatever price we're making that transaction. It's not a price that moves around. So sometimes you'll see these secondary markets, or if you go on Kalshi, you'll see the valuation or implied valuation through probabilities of SpaceX. Those are not credible market signals for us. And we felt that the best way was to say, whenever we transact, that is the value that we'll value the entire stake at. That is essentially how we're doing it, and has been kind of agreed with our board. So there's no place you can find the stock price. But you can head to our website and FAQ, and we publish the valuation every day.
Now, on the TEMA website, it says, why invest in NASA? Of course, the ETF by TEMA. And it says for high growth potential, multiple tailwinds, and active management. So can you explain how you guys achieve this? And also, would investors consider this more of a growth ETF? Because you say on your website, high growth potential.
Yeah, look, I think absolutely, right? You're in this for growth, right? These are companies that are on the cusp of this kind of revolution that's happening. Launch costs are coming down. More things are going to be launched in space, more business models, more kind of growth out there. And then we think the growth is going to be quite strong, as I mentioned before, although that's not a real forecast of the growth. I think it's just an underlying part of like what we see out there in the regulatory documents for anyone to see. I think growth is really important, but more quite interestingly, because of the portfolio that we've assembled, there's reasonable quality in terms of profitability and cash flow generation of some of these companies as well. And especially if you look out 2 or 3 years, if things progress as they will, these companies will become profitable and cash generative. And I think that's important. And that was one of the exciting points for the space economy. You don't often, these exciting technology areas, they stay unprofitable for a very long time. And that's not really what we are core of what we try to do at TEMA. We try to look for areas where that's going to change and we're going to be investing in a profitable and cash generative industry. The second part is, these tailwinds, right? The geopolitical nature of space, I think, is a tailwind. We think the falling launch cost is a massive tailwind. We think the idea of like low Earth orbit satellites and the expansion of effectively ubiquitous broadband on Earth, I think that's a huge tailwind. And of course, manufacturing, orbital data centers, and exploration as well. So there are multiple kind of tailwinds pushing the space economy upwards. And McKinsey, I think the latest estimate, we published it on our website. I think they think it's going to be worth 1.6 trillion, I think by the end of the next decade, maybe, or even further out. So what we're talking here is a very large potential economy as it expands, with real companies delivering real cash flows and real revenues and trying to open that up as things open up. And the final piece to your question is the active management. Hopefully that's come through in everything that we've talked about here. Like, what we're trying to do is build purely exposed ETFs that have been carefully built, put together, carefully analyzed in terms of the quality of the businesses, and put together into a diversified portfolio for investors to be exposed to. We don't run indices. We're not backwards looking. We're not trying to, nickel and dime and find other ways around. We're really trying to spend time analyzing and thinking about how the space economy evolves. As our founder likes to say, we're one of the few ETF issuers out there that has a real investment team that has been doing investing for decades. And we've been looking at this space for a while, and we want to give investors that exposure. And that's what the active piece is about.
Now, in terms of the active piece, how does TEMA select stocks that go into the portfolio? Of course, the first screen is going to be related to space, like stock selection, and also like weighing the portfolio. Is it based off of profitability? Is it based off of revenue growth? Is it based off of earnings growth? Is it based off of market cap? Because a lot of these popular indices are based off market cap. Then many other active managers, what's their edge? What makes them different is, they don't weigh by market cap. They weigh by stuff like, momentum and different factors. So can you walk me through what's NASA's alpha and edge?
Great question. So generally our investment process, and this applies to all of the ETFs that we manage at TEMA, we start by building a proprietary universe of space companies, and it's easier said than done. You have to spend a lot of time, use AI tools, our own knowledge of the industries, talking to key opinion leaders, etc., and to collect and build a universe of companies that are purely exposed to space. And then what we do is we narrow down that universe using some screening tools. So, what we're looking for are companies that have good operating histories, kind of a not necessarily, in a sort of 2-3 year view will be profitable, that have decent balance sheets as well. In some cases not, but really decent balance sheets as well. And you get what we call a research set. So like the set of companies that we can actually spend time analyzing, we think are decent. Then we decide, does it go into the portfolio? And it follows effectively we need to meet 4 criteria. The first is, does it have a good operating base? The second is, does it have a balance sheet, cash flow, or funding profile that we think will sustain the business in the long run? What's our valuation case? Why do we think this is attractively valued? And finally, we explicitly identify what is our edge. And so a company, to make it into the NASA ETF and any of our ETFs, has to meet those four criteria. And the first two are really about quality of the business. Like, does it have a good operating base? Management team that's done this before, track record, no history of fraud, good assets in the right places, an advantage of some sort, whatever it might be. The second bit is about what I said, which is you lose money in equity investing if you get the balance sheet wrong, and you lose it, you'll never recover it. And so we spend a lot of time making sure that the balance sheet and cash flow and funding profile are sound. These two are about getting the quality of the business right, because frankly, what I've talked about is the growth impulse is so strong that it's kind of the companies to lose in many ways, right? Some of these companies, if they misfund themselves or they have the wrong assets or whatever it is. The valuation case, then we construct and try to think about, what could this company be worth, as you say, 5 years from now? What is it like? How is it valued by the market today relative to some of its peers, and thinking about its own operating history if it's long enough? And finally, we ask that difficult question, like, what's our edge? Because investors know, it's a very, very liquid, well understood market. Can you articulate what your edge is in that investment? And so if you meet all those criteria, you make it into the portfolio, and then we size the positions using a set of rules. But effectively, we size based on conviction. Like, if we think that the company has high quality and has a decent valuation case, that will want to be the highest sort of positions in the fund, and vice versa. And we try to kind of tier the position sizing to avoid some of the risk management and behavioral mistakes that some of our peers make. And so together, that's roughly the investment process of what you get in the end, which is kind of a risk managed portfolio exposed to a pure theme with the best companies picked by investment management who's been doing it for years.
What's one, not hot take, but something that you want to say about SpaceX when IPOs? Because I bet people, we could like clip this up and before the IPO and maybe on the IPO, and people could watch this take you might have. But what's something in the next 5 years, 10 years that you have to say about SpaceX? Maybe as a company that will, we can't predict anything. This is not financial advice, but what's something about SpaceX that people that you said you have a prediction on or something like that?
My personal view on SpaceX is I think this is a company that's kind of misunderstood by the market. I think it is the first time a company of this size is coming to the market, and it's got Elon Musk at its helm, and it's a part of the economy and the stock market that a lot of people don't know a lot about. And so there's so many kind of elements for misunderstanding, if you get what I mean. And there's obviously limited information online and about it, but I think the people who really spend the time look at it and understand, what is SpaceX? Why do we think it's worth this kind of money? And they spend the time and analyze each one of those components. I think they'll be probably more surprised on the positive side than they will on the negative side. I think the press coverage is constantly looking for holes within the SpaceX story, and not enough coverage has been there to really understand the positives, partly because we don't have the information. But look at this business. It single-handedly pushed launch costs down 90%. Single-handedly. It created the idea of a vertically integrated space business, from building rockets, launching rockets, building satellites, putting satellites in low Earth orbit, selling you broadband. It's quite a feat to achieve all of that, when a lot of people said it couldn't be done. It's now there's 2 since Blue Origin companies that have a reusable booster. It's probably going to be the first company to have reusable rockets. The mind boggles as to what you can achieve with a reusable rocket. If you listen to Elon, his view is that you can get the cost of launch down to the cost of the fuel. At that point, for the cost of a business class ticket, you can fly point to point on Earth in 45 minutes. This is the kind of future, and this is in the future we're going to, and this is the company that has achieved this. So I don't want to sound like a zealot here. I think we're objective investors, we're thinking about that. But my bias is one to say that actually people have probably misunderstood this company and are focused a lot more on, some of the bit holes, the sort of XAI acquisition, even that, take the XAI acquisition. They just signed a deal with Anthropic. So there's something valuable in XAI apart from the lab, right? Which is the data centers they built, Colossus 1, Colossus 2. we all use X. Like that's the question. Is that a valuable asset as well within that? Who knows about this acquisition of Cursor and the option to buy that? Is that the right valuation? I don't know. But the reality is that this is still a coherent business within SpaceX, even if you point out some negatives within it, which is the lab is falling further and further behind. So what I encourage investors to think about when they start to read the S1, try to think of this as sort of put aside your biases and think about it as an objective way, and maybe look at it in a more positive light than you would have done otherwise, having read the press running into it.
How are you guys getting like all millions and dollars of just inflows? Like you guys are like a super fast running ETF since launch. You guys are probably going to be near like $1 billion fund. I can imagine it in the next few months, maybe in the next couple months. Like, what's making this fund successful? I don't know. A lot of ETF issuers watch my channel and watch my videos. You guys definitely are doing something super phenomenal at Tema. But I'm just super amazed at you guys' AUM since launch and just the traction you guys are having with this ETF NASA.
I mean, if I had the golden answer to that, look, I think first of all, we're very grateful for all the investors that are backing NASA and investing in Tema and Tema's ETFs as well. I think it's probably a couple of things that have sort of aligned, not to use a pun, the stars have sort of aligned. I think we thought about at a point in time where there's going to be this point where the fundamentals, the interest from investors, the excitement, the kind of understanding of the space economy are all going to sort of coalesce, and we sort of found that right timing. I think we've built a good product, right? A product that offers pure exposure, that offers pre-IPO exposure to SpaceX, and has that quality overlay that goes into all of our Tema ETFs. And, in terms of coincidence, I think the Artemis 2 launch, I think, was another element here that happened literally the week we launched the ETF that probably ignited people's interest and excitement about space, and sort of said, oh, well, we can fly all the way to the moon and around it. Maybe we can land on the moon. Maybe we can do some of these things if we put our mind to. And I think the more people learn about space, the more they realize how it's transformed and how much progress has been made to unlock some of these things. And when you're on that curve, that's where I think the excitement is. And when you talk to investors, it kind of instantly connects in that sense. And, there'll be volatility along the way. I can't sort of say there won't be. I think there will be parts, there'll be companies going up, there'll be companies going down. But the reality is this is an evolving part of the market that I think is here to stay.
Now, thank you so much to Yuri Kojamirian, the Chief Investment Officer there at Tema ETFs. I know I've been saying Tema this whole time, but Tema ETFs. So you guys made it this far. You guys know I'm pronouncing it right. If you guys like this video, please give it a like because of this cute puppy did. And don't forget to check out our last interview about SpaceX right here on your screen. We will see you guys all on the next one. This video is for educational and informational purposes only and is not investment, financial, or tax advice. I am not a financial advisor. Please always do your own research.